Hey guys, welcome to 90 Seconds with Chris. Today we're going to be talking about bonds. What are bonds? Say for instance, I was really good at baking. Every social events with friends and family, I'm the guy who always bakes the cakes. And say I was getting too many cake requests that I couldn't handle it, and as a result, I decided I'm going to set up a bakery. After doing my analysis, I realized I need about $10,000 for startup costs, but I only have $2,000 in my savings to put down for this business. So obviously I need to make up the difference of $8,000. I decided I'm going to raise this money by selling bond notes to my creditors, in this case my friends and family. I create 8 bond notes, each valued at $1,000, and I sell it to 8 different friends at a 10% interest rate and a 10-year maturity date. This means each year I'm going to have to pay each of my friends $100, which is the interest, and at the end of a 10-year span I'm going to have to pay them the full $1,000 each I borrowed from them. Fast forward 10 years later, business is booming. We are the #1 bakery in the United States of America, and everyone wants a piece of our cake. Our bakery is currently worth $1 million, and I currently own 100% of the bakery, which calculates to our exact dollar amount of the $1 million is worth minus the $8,000 I paid in interest over the 10 years, minus the $8,000 I paid at the end of the maturity date, which is 10-year period, which is about $984,000. It's all mine. All my friends and creditors can go on their way because they've been paid off, and the bakery at this point is mine to do with as I please.